This is just a short video explaining support and resistance levels in the market. So a support level would be when price is pushing to the downside, as it's doing here, pushing all the way down, and then price fails to go lower. That usually means it established an area of support, other known as a price floor, preventing price from going lower. So when price reaches this price floor, it usually bounces to the upside and starts to trade above the support level now. And well, it will be the opposite for resistance levels in the market. So price will be pushing up, forming bullish momentum. And once it reaches the resistance level, it will slow down, reverse, and now start to trade to the downside. Okay, so a resistance level is also known as a price ceiling. All right, so let's move down to some more information here. So there are around three different situations when it comes to support and resistance levels. So you could get a touch. That means price comes down to the level, touches it pretty much perfectly on this side and on this side. You could get a gap. So that means price would have reached up close to the resistance or support level and start to trade to the other direction. Like that. Or you could get the overlap, which means that price pushes down into the area a little bit more, then starts to trade away on both sides. So all these are three possible situations when looking for support and resistance levels in the market. All right, so take note of these, and then we'll move to this diagram that I drew here. So this is a simplified version of price movement, pretty much. You have price pushing to the downside, then having a bullish counter trend, then you push to the downside again, bullish counter trend, push to the downside, establish a low, but let's map out the resistance and support levels that price bounces off of to create the structure. So you'll see how it flows with the market. So price came down here and it formed a support level. So it pushed up after it reached this level, okay? And then when price pushed up, it counter trended and formed a resistance level. All right, so price failed to go higher after it reached this area. What did it do? It went to the downside. And now here we have a very interesting scenario. We have a break of support. So price breaks support, trades below support, and now comes back up to touch it to trade from this area as newfound resistance. All right, so price basically moves up and down, bouncing off of support and resistance areas. All right, so price pushed down from here and formed a support. So as you can see, price came down to this level, failed to trade below. It acted as a floor, pushed to the upside, and established a resistance. All right, so you can see that we pretty much traded in a what is called a consolidation range here. So we had bearish structure first. Price was making lower highs, trading and bouncing in between support and resistance levels. Then we formed a consolidation range, still bouncing from top to bottom of support and resistance levels. Then we have a break of support here. And when we have a break of support, we expect a counter trend usually. And now we have a retest of this previous resistance being traded as newfound support. All right, and then, well, as you can see again, that is exactly what's going on here. The market just bounced up and down off of support and resistance.